Ladies and gentlemen, good day and welcome to the CG Power Q4 FY26 earnings call hosted by IIFL Capital Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Renu Baid Pugalia, Senior Vice President, Research of IIFL Capital. Thank you, and over to you.
Thank you, Ritesh. Very good evening, everyone. On behalf of IIFL Capital, I'd like to invite the senior leadership team of CG Power and Industrial Solutions to discuss the fourth quarter FY26 earnings performance. From the management team, we have with us today Mr. Amar Kaul, Managing Director and CEO, Mr. Sushil Todi, Chief Financial Officer, Mr. Murray Neil, EVP Drives and Automation and International Motors Business, Mr. Gaurav Makhija, Vice President, Switchgears and APD Business, Mr. Ajay Jain, Vice President, Transformer Business, Mr. Dhananjay Bapat, Vice President, Railway Business, and Mr. Jitender Kaul, EVP Motors Business, India Subcontinent. I now like to hand over the call to Mr. Amar for his opening comments and explain us how do we deliver such stellar performance in the business, especially power systems surprising yet again. Thank you, and over to you, Amar.
Amar sir, please go ahead.
Go ahead. Thanks, Renu and team. Good afternoon, everyone, and welcome to CG earnings call. I'm happy to share with you all that CG had another strong set of results for the quarter and year ended 31st March 26, reflecting our continued momentum powered by disciplined execution and strategic focus. This is a record fiscal year performance for CG in recent times. Very strong Q4 caps off a record fiscal year with highest ever standalone revenue, order book, and PBT after accounting for exceptional items. Our Q4 26 sales grew by 22% year over year, PBT at 43% year over year with 260 basis points margin expansion, delivering a strong finish to a record year. And for the full year, our sales grew by 21%, PBT at 34% year over year with 143 basis points margin expansion, and again making it its strongest standalone fiscal performance yet. Further, the order flow remained pretty strong during the quarter with penetration into several new and emerging verticals and markets, taking the order backlog up 59% year over year to 15,719 crores and offering a strong revenue visibility for financial year 27. Now, as I go deeper into standalone performance, starting with Q4, the aggregate sales for the quarter was high at 3,129 crores, recording 22% as mentioned earlier. Profit after tax was higher at a growth of 49% at 412 crores, which is 13.2% of sales as against 275 crores, which was 10.7% of sales in Q4 financial year 25. Return on capital employed for the quarter was at 27%, and order intake for the quarter was 4,505 crores, which is 23% growth year over year, and unexecuted backlog at the closer of financial year 26 was at 15,719 crores, which is 59% up year over year. Now, going further deep into standalone performance for financial year 26, the sales was at 11,331 crores with a growth of 21%. Profit after tax was at 39% at 1,352 crores, which is 11.9% of sales as against 974 crores, which was 10.4% of sales in financial year 25. Return on capital employed for the year was 22%. Order intake for the year was 17,574 crores, which is 30% growth year over year. And unexecuted order backlog as of close of the financial year was at 15,719 crores, which is 59% up versus the last year. Now, moving to the sector-wise or the segment-wise performance, starting with industrial systems. While performance for Q4 continued on a sequential upward trajectory despite volatility and the rising commodity costs. The aggregate sales for the quarter Q4 was at 1,643 crores, which is 5% up with robust double-digit growth in the motors, which for the last few quarters you must be hearing me saying that we have stabilized a lot and the team is doing a fantastic job to stabilize that. So that has started showing the results there. PBIT was at 157 crores, 9.6% of sales as against 176 crores, 11.2% of the sales in Q4 25. Margin deviation is due to the mix change and the competitive pricing in railways business as well as higher MSR for motors due to commodity impact. But the disciplined pricing along with focused efforts on efficiency gains via cost and productivity programs over the last few quarters helped partially mitigate this adverse impact. Business continues to prioritize margin expansion through ongoing cost initiatives, structural improvements, pricing, and the mix shaping. We have improved margins by 20 basis points sequentially, and the order intake for the quarter was 1,478 crores, and the unexecuted order backlog towards the closure of the financial year was 3,075 crores. Healthy growth in orders and order backlog in motors and drives also was a contribution to this. And when we come to the full year performance, the sales for the year was 6,197 crores, which is 6% up with a healthy growth primarily in motors. And PBIT was at 613 crores, which is 9.9% of the sales, as against 707 crores, 12.1% in the previous year. And that margin deviation that you see here is due to the mix change in the competitive pricing in railways business and a bit of impact of we on our own slowing down because of the tariff impact from some countries that we had. So that was a conscious effort to delay that. And then disciplined pricing along with focus efforts on efficiency gain via cost and productivity program over the last few quarters helped partially to mitigate the adverse impact. And business continues to prioritize the margin expansion through ongoing initiatives and structural improvements in pricing and mix shaping. The order intake for the year was 6,365 crores, and the unexecuted order backlog as of closure of the year was 3,075 crores, and the healthy growth and order backlog in motors. Now, if I go to the other segment, which is the power systems, the performance continued upward trajectory with the sustained margins and continues to be in Q4, underscoring the robust market dynamics with disciplined execution. The aggregate sales for the quarter was at 1,487 crores with a jump of 50% year over year, reflecting strong execution discipline. PBIT was at 354 crores at 23.8% of sales as against 208 crores, which was at 21% of sales in Q4 25. And significant 287 basis points margin expansion underpinned by efficient order execution and strong operating discipline. Order intake for the quarter was 3,027 crores, which is 72% growth year over year, and unexecuted backlog as on 31st of March 26 was 12,644 crores, 91% up year over year, offering revenue visibility spanning several future quarters. When you consider full year performance for power, the aggregate sales was higher at 5,138 crores with a rise of 46%, reflecting its strong execution discipline. PBIT was at 1,123 crores, 21.9%, as against 668, which was at 19% of sales in financial year 25. which again comes to 281 basis points of margin expansion and underpinned by the efficient order execution and strong operating leverage. Order intake for the year was at 11,210 crores, 69% growth year-over-year, and unexecuted backlog as on 31st March was 12,644 crores, which is 91% up year-over-year, offering revenue visibility spanning several future quarters. With this, we conclude deep dive into our standalone performance, and I will now move to the consolidated performance. And as you know, consolidated results include the performance of our subsidiaries in Sweden, Germany, Netherlands, CG Adhesives Product and CG Semiconductor Semi, GG Tronics, Exero, and other non-operating subsidiaries. Starting with Q4 performance, aggregate sales for the quarter were up at 3,442 crores at a growth of 25% year-over-year. Profit after tax was 32% higher at 362 crores, which is 10.5% of sales for the quarter, as against 274, which was 10% of the sales in Q4 last year. So margin gains are driven by strong performance, were offset by continued investment in talent pool for semiconductor business, and total semiconductor segment impact of 38 crores, which is 110 basis points. Now, return on capital employed analyzed the quarter was 8%, order intake 5,335 crores, and unexecuted as on 1st of March 26 was at 61% year-over-year at 17,100. And when we consider our full year consolidated performance, aggregate sales for the year was 12,418 crores with a growth of 25%. PAT was at 27% at 9.9% of sales for the year, as against 973 crores, which was 9.8% of sales in financial year 25. Margin gains are driven by strong standalone performance and were offset by continued investment in our talent pool, as mentioned before. And return on capital employed for the year was at 20%. Order intake for the year was 19,616 crores, 33% growth. And unexecuted backlog as on 31st of March was 61% up at 17,107 crores. Now, moving to the key events for the last financial year, as you would have seen, we had announced that we bagged order for the supply and servicing of 765 kV transformer packages from the large customer Power Grid Corporation. That total order value was about 641 crores, is the highest single order domestically received in the transformer business in CG. The order is expected to be completed between 18 to 36 months. And also CG secured the single largest order of 244 crores for EHV business from Techno for supply of packaging transformer, circuit breakers, lightning arresters and combination. And CG also launched successfully and completed QIP for equity shares and raised 3,000 crores. The issue opened on 30th June and closed on 3rd of July. It was oversubscribed by 3x and saw participation from both Indian and global marquee investors. CG Semi, a subsidiary of CG, unveiled one of India's first end-to-end OSAT facility in Sanand in Gujarat. And with this launch of G1 facility, CG Semi becomes one of the first fully served OSAT providers offering solutions across both traditional and advanced packaging technologies. This marks a major step in strengthening India's semiconductor capabilities and supporting the country's goal of becoming self-reliant, while also serving global markets. The G1 facility will operate at a peak capacity of 500,000 units per day, which we are trying to even increase that output over the next few months or quarters. We should be in that situation. And G2 facility, located about 3 kilometers from G1, is under construction, expected to be completed by end of 2026. Once operational, G2 will scale up to the capacity of approximately 14.5 million chips per day. Together, the two facilities are projected to generate about 5,000 direct and indirect jobs in the coming years. Now, CG Semi is also eligible for capital assistance as per the scheme for setting up OSAT facility launched in India Semiconductor Mission ISM under the Ministry of Electronics and Information Technology wide approval dated 8th March 2024. The approval covers a 5-year period from financial year 24-25 to 28-29 for a total project cost of 7,584 crores with central government assistance of 3,501 crore and additional state government support equating to 40% of the central government assistance coming to about 1,400 crores. The fiscal support agreement was signed on January 17, 2025, and the trust and retention account agreement was signed on September 15, 2025. The Board of Directors on 29th October 25 approved a greenfield expansion for switchgear business with an investment of 748 crores. Net of taxes, the expansion is proposed considering the expected increase in demand for medium voltage and extra high voltage circuit breakers, instrument transformers, gas insulated switchgears for domestic and also to the exports market. CG secured about 900 crore worth of power transformer order, which was a substantially large one. It's for the data center in United States. The order was received on 16th of January 26 and is the largest single order received by CG for supply of power transformers. And under this contract, CG will supply the transformers specifically engineered to meet the stringent reliability, efficiency, and uptime requirements of hyperscale data center applications. This order will be executed for a delivery period of 12 to 20 months with the delivery terms of FAS Mumbai Port as the Incoterms. The Board of Directors of the company at its meeting held on January 27, 2026 considered and approved the payment of interim dividend of 1.3 per equity share. That is 65% of the face value of Indian rupees 2 per share for financial year 25-26. With this, I conclude my opening remarks, and audited financial statements with detailed notes are available as part of stock exchange filing and on our company website. Thank you so much for listening in, and over to you, Renu, for Q&A.
Hello, Renu ma'am.
Yeah, can you open the session for Q&A, please?
Thank you. Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use hands while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Yeah, hi sir. Good afternoon. Thanks for the opportunity. I have 3 questions. First, it's good to hear that we finally seen double-digit growth in motors. Just wanted to understand, how much is volume growth and how much is price-led. Also, given the current inflationary environment, how much more of price hikes, would you intend to take in the motor side of the business? Thanks.
Sure, Ankur. I think a great question. So on the motor side, I would say it was a combination of the price increase that we got from the customers, and a combination, I would say, about 50% of both, and the volume hike as well. So the volume hike is almost in sync with the market growth that we have seen, but also we didn't let our pricing leakage also to happen from there. Okay. And how much more do you think you may have to take? I mean, how much to cover the cost increase? It purely depends on because we keep a laser sharp focus eye on the commodity inflation, the way it is happening, because it's a little tricky for motors or drive business versus some of the large long lead item, because where you get the PVC. So we keep a laser sharp focus on how it is going or the predictions on that, and basis that we take the decision case to case basis. Maybe it's not required. But what we are also honing our skills on is the pricing discipline. How do we make sure that we are not having the leakage by giving additional discounts. So I think that's another thing that we are working closely on.
Okay, fair. Okay. Our second question, sir, would be on the power product, the orders. While it's very, very strong, given we got this 900 crore order for the data center. But if I exclude that and I look at the domestic orders, that's up about 20%. X of that data center order, it was up about 16% last quarter. Sequentially, we are in that 2,200 crore ballpark. So, just trying to understand, is this like the more sustained kind of growth rate that we should be kind of expecting in that 15-20% ballpark as we head into next year? Obviously, the base also starts catching up. Just your thoughts on the overall, trajectory here on the domestic transformer power product system. Yeah.
So I think, Ankur, if I had to give a short answer, the game has just started. So 900 crores is what we had to report because it was a substantial order that we have. But after that, also the app is open, and as we, put our feet on the ground outside India as well, anything we touch, it just opens up. So there's so much of opportunity available for everybody. You just need to know how to encash on it, how to make sure that you execute with the right quality, right standards, right reliability. I think that's what will be the differentiation, nothing else. And if you should have the appetite on that. So I'm not going deeper whether it's transformer or it's switchgear, but I think overall for power we still see a huge demand all over the world.
No, fair. I understand X of India, but about specific of India is what I was talking about. How would you see the Indian power product market shaping up as you head into the next couple of quarters?
Yeah, that's also growing at a very, very fast pace. In fact, as we are adding, if you see just 1 year back, we were at some 17,000 MVA capacity for transformer. Today we are almost close to 65,000 MVA. I don't think anybody has done that kind of increase. And still we feel as we beat the large customers or even the government companies in the utility sector, what we keep hearing, give us more. I mean, nobody's saying stop it. So I think it's like Amrit Kal for power sector in India as well.
Okay. And just one last one is on the balance sheet. I see this item called other financial assets totaling almost 3,000 crores, in Q4. Can you just help us understand what is that?
No, this is that, the QIP money which has come up. So it is parked into the different asset class.
Got that. Great. Okay. Got that. Okay. Thank you so much. Yeah.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. My first question is, can you help us with the GG Tronics order inflow, and how did the year pan out in terms of revenue, EBITDA and PAT, and how do you see the order outlook in the segment?
Yeah, Mohit. So I think GG Tronics, if your question is specific to the order book, I think it's pretty strong right now. I think we should have the, I think the order backlog should be the tune of close to 1,000 crores approximately. So right now, if the second question might come for, when do we start executing? We are at the last leg of the approval process, which is the passenger trials, which is already going on. So there are about, as of today morning, 12 trials have already been completed. And so I think maybe another month and a half, all these trials should be done. So then we start executing it.
And what was the last year revenue, EBITDA and PAT? The number is available with you?
You mean for GGT or what?
GG Tronics, yeah.
What's your question? Sorry.
My question is, what was the revenue and profitability for the GG Tronics especially?
Okay. So they are at, I think, at 100 crore at a full year basis. and they are making money. They are not losing the money. They are at at least around 4 to 5 crore PBT number.
My second question is, can you help us with the understand the receivable jump in receivable, which was 2,000 crore last year. I think it has jumped to 2,900 crore, if I'm not wrong. So it's up by around maybe 50%, while the top line is up by 20% odd.
No, you are talking about the trade receivables?
Yes.
Only trade receivables?
Yes.
Okay.
Concall.
So you look at that, the growth which is coming mainly in the power segment, right? So if you look at even that, the return of capital employed on the power side is more than 100% plus. So the receivables which are there today, that is more is coming from the power side. And the average credit period is ranging between 90 to 100 days.
Understood. Okay, thank you. So that's.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, sir. Thank you very much for the opportunity. Sir, firstly on motors, what would be the mix of IE3 and above in our overall FY26 volume? And where do you see that growing in next 2 to 3 years? Does this change in mix help our margins, or this change in mix will be margin neutral?
So, to be specific, I'm not allowed to give exact numbers of I3, I2, I4 numbers, but I can tell you it's not very substantial at this point of time, because even though we talk about energy efficiency, but Indian market is a bit slow on adoption of I3, I4, I5 technologies. But I'm sure it's going to pick up in the next couple of years as government is tightening and the need for energy is increasing further. And our R&D and development is also accelerating the same, to have a complete portfolio of I3, I4 motors. So that is progressing well. So to your question, to be specific, it's not very big in terms of the percentage of the overall portfolio. Because of market size, not because we cannot supply.
Understood. Secondly, on the GIS, we were in the development stage for 440 kV GIS. So if you could share an update on its commercialization and also the development plans for 765 kV GIS, if any.
So Gaurav, you want to pick up that question?
Yeah, sure, Raman. So thank you for that question. So for 400 kV GIS, the plan is exactly on the schedule there. We have already tested the phase 1 of our GIS portion. The phase 2 is scheduled between Q2 and Q3. So yes, once we have the type test done in any of these international labs, we should be out with our commercialization for 400 kV GIS. Yes, further to that, 765 kV is on the conversation there. Yeah, so 2027 financials would see the commercialization happening for 400 kV GIS.
Understood. Lastly, if you could share an update on the drives business in terms of how much sales, assembly, value addition, localization that we are now doing in India.
So drives, I think there's a series of new product launches that is planned from April onwards. It's already started getting launched. It's called AMX drives, which is a next generation drives, and again low voltage drives. And medium voltage, the percentage is not so high, but low voltage drives is almost 100% indigenous.
The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity. Phenomenally strong results in power systems. Could you give us an update on the power transformer capacity expansion, how that's panning out, and what are the sort of the timelines as you add capacity and reach your target? The second question is on the export business within CG. So what has been the scale or size of exports overseas revenue separately for power systems and industrial systems in FY26, and what is your outlook for growth through FY27? What are the opportunities that you're pursuing? Those are my questions.
So, Ajay, if you can take the first question in terms of transformer capacity and then send it back to me for the exports, I will answer.
Thanks, Amar. Thanks for the question. Regarding the transformer capacity addition, we have completed the brownfield expansions both in Gwalior and Bhopal. The Gwalior facility has now capacity increased from 6,000 to 10,000 MVA, and the Mandideep Bhopal facility. So there we have done capex, and as per the capex plan, the capacity is increased to 40,000 MVA first, and then we had our lean plants. We worked along with the lean consultant, and this capacity has grown to further 65,000 MVA at the end of the last year. Now, for the forthcoming additions in capacity, our greenfield expansion is greenfield plant erection is in progress, and we hope to commission the plant somewhere between July and August. And initially, we will be starting with the capacity of around 25 to 30,000 MVA, and by the end of this calendar year, we will be touching the peak of 45,000 MVA there. So, as of now, if we total up between Gwalior and Bhopal, we have a capacity of 75,000 MVA and another 45,000 MVA to be added by the end of this year. So this will be around 1,10,000 MVA by the end of this financial calendar year. So over to you, Amar.
Okay, thanks Ajay. And I think Sumit, on your other question, we would not give the split of exports by business, but yes, exports and services is a focus area for us. The only thing I can talk about is both the areas we have more than doubled our order bookings between last year and this year. So, and we have much larger aspirations. So more to come, so stay tuned on it. Exports and services will stay as our key focus areas.
Thank you. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yeah, so my question is again on the motors and drive business. So since the start of the war, and because a lot of clientele we understand is SME and SME. So how has the demand been for that part of your business where you sell stuff to SME and SME?
Very strong demand.
So let's see. In any case, for motors and drives, our exports is not substantial today. So I'm keeping out our European business for drives because that is primarily the European plant which supplies to Europe as well as to US. That is going on that geography. So there's not any specific dip or anything that we see from these regions because of war or anything.
But what about in India? I mean, I believe you will be selling to small industries quite a bit, right? Is the demand holding up in India, or is there an impact on demand because of shortage of gas and incidents?
We don't see the dip in that. In fact, with our GTM getting activated now with the senior leaders in place, in fact we see improvement in the order intake.
Okay, so good to know. And so my last question is on, again, the transformer capacity. So currently operational 65 kVA. How much of it will be 400 kVA plus capacity, or is it fungible across all the kVA ranges?
It is across all the ratings that you have, even up to 765. In fact, we are now getting the new plant coming in up to 1200 also.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Yeah, I just have two quick questions. First is on the power
Sorry
side.
to interrupt, Amit sir. Your voice is very low. Can you just get the headset a little bit closer?
Is it fine now?
Yes. Okay. You can go ahead. Thank you.
Yeah. Amar, I think first of all, congratulations on great set of results. On the power business, when you tap the American market beyond data centers for American grid utilities.
Yeah, Amit, I couldn't hear you. You'll have to come close to the mic.
The line for Amit sir has been dropped. I'll move for the next question. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity, and I hope I'm audible to you all.
Yeah.
Can you speak a little bit louder, please?
Sure, will do so. Firstly, congratulations to the entire team on a very strong set of results once again. The first question that I had from my side was if you could give us a sense of the addressable market on the GIS side in the 400 and 755 kV category, domestic, overseas, whichever way you want to think through today. How do you think through the addressable market for yourself?
I think, Gaurav, if you want to answer that, of course, not going too specific into the ratings, but you can generally talk about GIS market, the second market.
Yeah. So, not to get into any specifics of the details of GIS today, if you see the overall figure today would stand close to about 12,000 odd crores as a market total, right? Of which I believe around 24-30% still would be GIS. Rest of them could be an AIS figure. So that's the quantum, possibly a potential addressable market that we could also be aiming at in future.
Sure. Understood. And I'm assuming this is a domestic part. Is there also an overseas part that you believe can fall inside our kitty?
Yeah, so I think as Amar mentioned, I think exports as well as service remains our key focus. So whatever we are developing or whatever is under the plan is both for domestic as well as exports for product development, whether it's a 145 kV GIS ranging to 170 to 45 as well as 400 are under plan for both domestic and international markets now.
Understood. One of your peers was talking about, and in a similar zone that you are in terms of capabilities, was talking about moving on the HVDC side of things. Is there a plan that the company has, and what are the key milestones that they may have to achieve to kind of reach that level of capabilities?
Yeah, so we it's still at the infancy stage. We have laid down a bit of roadmap on that, but the plan is not fully mature. So when we are ready for it, we'll surely share.
Sure. Maybe the final question from my side, this is more on the semiconductor part. You made an initial investment of about 50 crores inside Edge Cortex. Could you talk a little bit more about that and how to think through investments inside semiconductor design from here on? Maybe a little bit more on the medium-term basis. Yeah. Thank you. That'll be my final question.
This is just one of the steps that is into this direction. You must have heard me every quarter in the earnings call or any of the interactions that especially on.
Conference is now being recorded.
Okay. Can you hear me?
Yes, sir.
Yes. Yeah.
Okay. So let me repeat. So what I was saying is that so these investments, as you have heard me in last couple of quarters, that we are looking at a detailed pipeline of candidates on potential M&A to keep building on our design capability. So the first step was on the RF design capability, but that's not where actually stops. So the investment that you see is just one step forward in that direction. And, especially with AI thing coming in, there's so much every day the technology is changing. So you'll see more and more of these investments coming into even these startups or these kind of companies where we will get to know the latest in the world that is happening. So more to come on that.
Thank you. The next question is from the line of Rahul Gazari from Mercury Capital. Please go ahead.
Yeah, hi, Amar. I have a question on motors. Are you able to hear me?
Yes, Rahul.
Okay. So on the motors, is it fair to say that the worst is behind and we can see improvement in growth and margin from here? And also, I think you talked about this earlier, where you've taken some price hike. But through the last entire year, how much price hike did you actually take? And your comments on competitive intensity and market share in the motors. That's the first question.
Okay, super. So I think to start with, your question was how much price increase did we take? Is about all put together it was 7.5%, so total of 17.5% price increase that we did in the last 3 to 4 quarters, and with decent realization. The good news also in that the team led by Jatinder, who leads this business, is they have kind of maintained their market share in spite of such a steep price hike. Now, I generally say that we are blessed to be the market leader, so the moment we do something like this, everybody else follows us. So that's what has happened in that direction.
And to quantify that, that's in the range of 35% market share?
Yeah, it depends on different types of, if you look at overall LT motor side, we would be approximately 38-39%. Approximately, if I go to larger industrial motors, it will be around 19-20% approximately.
Okay. Okay, and fair enough. So that's on the motors. Now on the power, I want to understand, the order that you got from the data center, that actually indicates the delivery time anywhere between 12 months to, I think, 18 or 20 months. Is that the quickest you can deliver a transformer to the US market, or you think you can do it much faster?
Do you want to answer that?
Yeah, thanks for this question. I see the delivery of transformers for the US market basically depends upon the delivery of the components like passenger and bushings. Even though we can manufacture a transformer earlier than that, but we will always be dependent on the passenger deliveries which come from Germany. And they are anywhere between 9 to 12 months. So as of now, we are constrained. We can deliver from 12 months onwards only because of this reason.
Okay, because I understand, Koreans can actually deliver in closer to 10 months. That's the reason of this question. Fair enough. My last question is on the semiconductor business. While you did indicate that the chip revenue will start in 2 quarters, the 500 crore which is currently booked into the financials, all of that is design-led revenue, or there is some other part in that revenue? That's my last question. Thank you.
So please stay connected. The line for the management has been disconnected. Please stay connected. Mr. Rahul, you can go ahead with the last question again, please. Thank you.
Yeah, I don't know if you heard the question, or I will repeat the question.
Yes, please. Yes, Rahul, because the line got disconnected.
Yeah, so, my last question was on the semiconductor. Now, you have indicated that, the semiconductor chip revenue essentially will start in but 2 quarters or so. So I want to understand, the 500 crore which is booked into the financials, all of that is design-led revenue, or there is something else in that 500 crore?
Which 500 crore you're talking about?
The segmental breakup that you all give of the revenue over there. for the full year, the number is 500 crore. So I just wanted to be sure what exactly is that number.
This is the revenue which is coming that the company what we bought from Renesas, the RF business from the Renesas, the Exiro.
So RF and design, these are the two things.
Not two things. Exiro is the name of the company that we created. RF business is what we bought from Renesas, and that is what has started generating the revenue. So I think, it's about 65 million was a plan, so which comes to about 500 crores. You're right. So, because it is a running operational company, so that is the number you would have seen there.
Thank you. Reminder, please, to all the participants, please restrict yourself to 2 questions. The next question is from Amit Mahawar from UBS. Please go ahead.
Yeah, hi Amar. My first question is on the power system exports. How do you see the timeline for the grid utility approvals for us now that we have data center orders basis, maybe the quicker timeline? How soon can we expect the grid utility turnaround for us on orders? That's the first question.
Grid utility, you mean in terms of supply or approval process?
Yeah, in terms of approval and potential orders from the American grid utilities. Is it more like 6 to 12 months or a longer period, and some contours around that?
No, it purely depends on what we're talking about. Like America works very differently than the way we work in India. So America, there are 478 utility companies because every area is divided, and even if I take top 100 utility companies, that amounts to about 70-75% of the total revenue. So every utility is pretty independent. So, and everybody has different timelines. So you cannot categorize in 6 months or 1 year or 3 months or 5 years. It will vary from utility to utility.
Sure. And the second question is on industrial segment. We have a very, very formidable competition, from maybe the likes of NIDEC or WEG, etc. Some of them are very, very aggressively expanding their manufacturing footprint in India. So my question is more on, in fiscal 27, do you think the delta for us on profitability and growth is more on the rail part of industrial as we execute the propulsions and the tronics book? Or do you think industrial motors also will contribute significantly to the profitability in 27, or that's a year where we're still not hopeful on the motors profitability? Some color on, the industrial versus rail profitability in 27. Thank you.
No, I think these are different verticals under the segment of industrial. Rail is a separate vertical, which is led by Dhananjay. I think he's doing some good work there to turn it around to make sure that's coming to a much bigger number. The way Jatinder did turn around for the motors business, which is doing fairly well. So I'm sure railways also in next few months or quarters should be inching upwards. So it's a combination of both. And to your question on competition with the biggies and all, and that's fine. I think competition is always healthy because that keeps us on the toes. So we are just honing our skills on keep building NPDs, build our design capability, and also make sure that we are cost competitive, not cheap, but cost competitive, so that we continuously keep eliminating the waste from the system. So that's an ongoing effort.
Sure. Thank you. Thank you very much, and good luck.
Thank you.
Thank you. The next question is from the line of Girish from Morgan Stanley. Please go ahead.
Hi, sir. Thanks for the opportunity. I have a question on railways ex GG Tronics. So what's been the growth rate in revenues for FY26? And also, if you can share any outlook on this piece of the business. And second, I wanted to understand the pipeline for US transformers, if you can share any qualitative color around how things are. I know you've spoken about it in the past, but any L1 status here, or how does it work there? Like, what's the size of the opportunity that you're looking at in the medium term? And the final question was on CapEx. If you can just color what will be the FY27 and 28 CapEx numbers.
I think you were supposed to be limited to 2 questions. There are 3-4 questions to ask. So, but anyway, let me go one by one. So which one do you want me to answer first?
So you can take up railways and then transformer for US and then capex.
So railways is, so your question was specific to Gigitronics. So Gigitronics,
Except Gigitronics, what's the growth, sir, and outlook for that? Except Gigitronics.
Except? Is your question except Gigitronics or what is the question?
Yeah, except Gigitronics, excluding Gigitronics.
Yeah. So the breakup we don't give, no, it's part of industrial business. So we are not allowed to give the breakup of each of the businesses.
So I was looking for growth rates, sir, and the outlook.
Yeah, that's what I'm saying. We don't go specific to each of the business lines in the business. So if you talk about industrial or something, then we can talk about it. But we don't go deeper into each of the businesses.
Okay, if you can share some perspective on railways outlook.
Yeah, so railways, I think maybe Dhananjay, if you can give just a flavor of, how do you look at the market and your key one or two initiatives there without getting too deeper into numbers or anything.
Yeah, thanks, Amar. So on railways, yes, we see sizable potential with some of the new products that we are working through. And in addition to that, we also see some good opportunities on the export side, which we have still to explore, long way to go. And then on the service side is another area where we see good potential for, high double-digit growth there. And then, of course, helps us improve our profitability and margins on that. Thank you.
Good. Thanks, Anjay.
Anything on the transformer pipeline?
The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Congratulations on a great quarter. So my first question is on the margins. So are we facing any impact of geopolitical issues currently there on the margins? And have we been able to pass on the commodity price impact to the customers, any impact on the transformer oil prices, impact on margins or bushing? So if you can give some color on the margin on the power systems business, and going ahead, how do you look for FY27? Do you see further expansion in this business margins?
No, thanks for the question. So I think a lot of your questions have already been answered. One is the numbers. If you look at power systems, if there was stress on the margin, then it would have shown up in the numbers, right? So if we are doing better by 200 to 300 basis points on each of these segments, so that means the margin pressure is taken care of. And this margin pressure is not only from what we get from the customer, it's also how operationally efficient we are becoming. So I think that's the critical thing, and that's the edge that we have from CG point of view. So that's one. So what is the second question?
I was asking largely on how is the commodity inflation hitting us, and are we being able to pass it on to the customers? Yeah. So is it entirely passed through, or will we see some impact in Q1 coming in on the residual order book which we have, which may get hit because of the commodity inflation?
So that is a simple, different businesses, different areas. So like I talked about motors, we discussed just now a few minutes back, is most of it we have been able to pass on with the steep increase in the pricing. For other large businesses, it's really not a problem, for example, transformer or rest of the large businesses, because you always have the price variation clause with the customers. So whenever commodity goes up and down, it gets passed on to the customer.
The next question is from the line of Shirom Kapoor from Jefferies. Please go ahead.
Hi, sir. Thanks for the opportunity. Just had a question. So exports, while you don't give the breakup between industrials and power systems, could you share what is the overall contribution to your consolidated sales of exports this year?
Right now, I think it's very small. It's about 5% approximately. But again, the aspiration is to be in the much larger. Like as I said, we kind of more than doubled in this previous year, and this year we are taking much more ambitious targets. So stay tuned on that.
So in FY25, we saw exports contributing about 10%. You're saying it's small at about 5-6% now. So did we see some kind of decline?
No, it was never 10%.
Sorry?
It was never 10%.
In the overall consolidated mix?
Yeah, so if you include Sweden, Germany and Netherlands, it can go up to 8 to 9%. But if you talk about from India to outside country, it is around 5 to 7%.
Understood, sir. And just my second question is on your railways business, while you highlighted that you don't give the breakup between railways and non-railways, could you give some direction in terms of margins on the railway business? Because you've been mentioning some kind of pressures because competitive in the competitive railway business. So how do you see margins tracking going ahead?
Yeah, so that's why I said, and I think Dhananjay touched a bit on, how he's prioritizing. And as you know, Indian Railways, you won't be able to get too good a margin. Important is your operational efficiency. And second lever that Dhananjay has already activated as a part of overall theme I mentioned is services. So service is going to be a big function of us, and he's already created that vertical and is getting driven. So that will give us substantial increase in our margins. But again, it doesn't happen tomorrow. It takes a bit of time. But he's executing it fairly well. So that's another lever. And last one I would say is also on the NPD. That's where the activation is on the R&D to get more and more new products. That helps us to become more competitive. So these are some of high-level actions are being taken to continuously move this from single-digit margins to double-digit. I think that's the maximum I can reveal to you.
Thank you. That was the last question for the day. I now hand the conference over to Renu ma'am for closing comments. Please go ahead.
Thank you, Jitesh. On behalf of IIFL Capital, I'd like to thank the management of CG Power for taking the time and discussing the results with us. Sir, any closing comment that you would like to make?
No, thank you, Renu, and thank you, everybody. I know there's a large crowd here and interesting questions. Thank you. Stay tuned with us. I mean, there are exciting days and months and years ahead of us. So thank you for your time with us and appreciate it. Have a good rest of the day. Cheers.
Thank you. On behalf of IIFL Securities, thank you. That concludes this conference. Thank you for joining us, and you may now disconnect your lines.